it is sad and it's regrettable that so many people are like, well, I'm only going to deal with taxes when I have to. And it's that once a year meeting. I cannot tell you how bad that is, people. If you're a real estate investor, a crypto miner, a entrepreneur on Main Street, a consultant selling crap on the web, doing affiliate marketing, any of that, it is not about finding the right accountant. It's about taking control of your own financial life and knowing just some good basic tax strategies. It's not that complicated. It's fun. It's like when you go shopping and you see how much you save. I want you excited to do your tax return because you're going to see how much you're going to save and how much you can start building in a tax-free format or tax-deferred format, or just not paying as much taxes as you have to each year. And so I'm so grateful you're having me here. This is so important, so powerful that you've taken the time to do this.
Absolutely.
And I just want to challenge everybody to embrace the topic. I loved what you said. It's always not how much money you make. It's also how much you save and put away. And I'm sick and tired of people going to these rah conferences where people spend thousands of dollars so I can learn how to make more money. But heaven forbid we have a conversation about how much to save and being freaking organized and taking time more than once a year to just deal with taxes. This is the number one expense in small business owners' lives. And they just want to talk about it for 30 minutes and forget about it. Bull crap. That is not the way to do it. So I'm so glad you're having me. I get excited. I get pissed off when people just, so important. So love your intro. So good.
Thank you so much. I appreciate that.
Oh my gosh. Well, trifecta then.
Trifecta. Right. You talk about that a lot. Can you shed light on what that is and why you think that's the best way that we should set ourselves up for building wealth?
You bet. Well, the trifecta is a concept I came up with I've been teaching it for years, but finally gave it a kind of a name 3 or 4 years ago. And it's really taken off out there and it's really helpful. I think all of us learn most easily with a picture. We need kind of a picture says 1,000 words. We need a framework that gives us a way to structure our business and tax life. And it really gives us better protection from a lawsuit and saves us taxes. So the trifecta fundamentally is this 3-legged stool, if you will. If we were in front of a whiteboard, at the very bottom at the base of this trifecta would be your trust, your revocable living trust, your estate plan. It's there. And some of you are like, well, I'm not old enough, or I don't have enough money, or I don't have kids. Holy hell, all of you need a freaking trust. A trust provides privacy. We've got so much to worry about with scams and identity theft and all of the crap. This week, I've probably gotten 15 different texts of scammers trying to get me to do things. Privacy is more and more important in this digital age we live in. And if a revocable living trust is there for, when you die, where's all your crap go? I get it. But it's also there to make sure your name is not on all of your assets, on all of your properties, on all of your LLCs or your retirement account beneficiaries or your small business. We have a mail forwarding system for privacy. We want to use your revocable living trust to protect your name from being out there. You want to freak yourself out, just go Google your name, anybody. And it's scary. So we're focusing more and more on privacy planning for our clients. And the revocable living trust is a huge part of that. So that's your foundation in the trifecta. That's the bottom. Then we take a line and draw it right down the middle of the paper and split that trust in half. On the left side are our operations. That could be a day job where we have a 401k at work and we're doing the match and out strategy. Just put enough to get the match, you're out of there. You may be married and one of you have the day job with the benefits and stability and the other one's building the business. You may be flying solo and have a part-time job or whatever. Now it's estimated 45% of Americans, it's almost 50% after COVID, 45% of Americans have a small business on the side, whether it's driving for Uber or DoorDash or consulting or just a little bit of manual labor or selling something on eBay. That small business gives us so much opportunity to do tax planning and also to build more cash flow and more wealth. So the left side of your trifecta is typically going to be an entity that we can build upon. Maybe it starts out as an LLC. It could be a sole prop until you graduate further along the process. Typically for my entrepreneurs, it's going to be an S corporation. S is in small corporation. And so the S Corp is where, gosh, oh my gosh, every dentist, doctor, realtor, broker, plumber, electrician, consultant, online marketer, crypto miner, crypto staker. I mean, we're all using the S corporation. The S Corp is your left side of the trifecta. And all of your operational income from your day job and your small business flows downhill, just like water flows downhill. All that money flows downhill into your trust and 1040 tax return. Now, a trust, you don't do an extra tax return with a trust. There's no annual fee. There's none of that crap. But that trust is providing privacy on public record for all of your assets. But your 1040 is where all that money flows down from the left side. Okay. Now, I'm almost just done here. You're I know you're being so patient, Aysha. Okay. The right side of the equation is your asset side. So the asset side is your passive income. We may have retirement accounts in there, Roth IRAs, 401ks, HSAs, anything that we can do tax-free or tax-deferred, but it's also our LLC for the rental property. Rental property may be in our retirement accounts. It could be our stocks or notes or crypto or real estate, but we want to have our assets in their own entity. So you have an entity for your holding and an entity for your operations. And those two buckets flow down in a triangle, if you will, to the base, which is your trust. So that's the trifecta. We want assets on the right, operations on the left, and they all flow down into your 1040 and your privacy strategy. And when you get a picture of that in front of you and you're like, oh, okay, now I can take tax deductions over here. I can build wealth here. I've got a firewall for asset protection. I know where I'm going to pay off debt. I've got reserves. And that picture, I carry around mine with me everywhere I go. We build a trifecta for every client that wants to do a tax plan or an entity so that we can really give you a plan for the year and your next 3 years, 5 years, and 10 years so you know where you're headed. That's it.
Now, on the operations side, when does one graduate from an LLC or sole proprietorship to an S Corp? Does your business have to be earning a certain amount?
Yes. I want to see the transition point is around $40,000 net. So you might be bringing in 60,000 in sales, commissions, 1099s, Venmo, PayPal, Apple Pay, whatever it is. You might be bringing in, let's say 60 grand. And then we've got $20,000 in write-offs, cell phone, travel, home office, computers, electronics, marketing, legal, accounting. And so you've got all these write-offs that you're constantly taking advantage of. And if you're taking home around 3,000 a month or more, you're the perfect candidate for an S Corp. Now, can I have one more thing on this? Let me give an example. My daughter.
The floor is yours.
No, but a quick example on this is my daughter, Sydney, who's a realtor. And I just love it. When she was 12 years old, I said, you're going to be a realtor. She was like, all right, whatever the hell that is. She probably said, not hell, but anyway, she was a good little girl. But so my 12-year-old daughter, Sydney, I said, you're going to be a realtor someday. She's phenomenal. She's down in Orange County, California now with a great brokerage. Well, when she became a realtor, I set her up as an LLC, limited liability company.
Correct.
Now, LLCs do not save taxes. So many people are like, well, I got an LLC so I can take write-offs. Doesn't matter. You don't have to have an LLC. Well, I did an LLC to save taxes. No, you didn't. LLCs do not save taxes. They're a structure to get a tax ID number, to get a bank account, to reserve a name, to do marketing, to look legitimate. But you can convert an LLC to an S Corp, even retroactively for up to a year when you hit the right level of income. So the LLC gives us a lot of flexibility to say, oh, I need to be an S Corp. I'm going to do an election. We charge $150 to do the election. So super simple and easy. So why did I set her up as an LLC? When you say, well, Mark, just wait until she makes money, then you do an S Corp. The problem is you can't backdate and set up a new S Corp. But I can backdate and convert an LLC to an S Corp. So when clients say, well, I don't know when I'm going to be ready for an S Corp, but I'm going to start a small business. Okay, cool. Let's get it legitimized. Let's get your name reserved. Let's get a corporate credit going or an EIN or a bank account and start treating the LLC like a real business and practice our separate accounting and all those goodies. Once you start making that 3,000 or 4,000 a month, sometimes it catches you off guard and you're in the middle of the year and like, oh my gosh, my business is taking off. We can wait till the end of that year, that first year where you break that threshold and backdate it to the beginning of 1/1/22. We can see where you're at throughout the year and then turn it into an S Corp. So the point is, don't wait until you make 40 grand and go, oh, I should have done this, because I can't backdate, but I can backdate an LLC. So we start as an LLC and then we convert to an S corporation when the time is right.
And the S Corp will give you tax advantages?
Yes. Now that's where the tax savings comes in.